A lot for that. Well, let's move on then. Abhishek Somany, the MD and CEO at Somany Ceramics, he joins us now to talk about the sector as well as the gas price fluctuations that we have been seeing as well. Hi, Abhishek. Morning. Thanks so much for joining in. Well, let's focus first on the gas bit. There's been a price reduction. So can you quantify what has been the price reduction, say, in the last 1 week? And also, if you could tell us in the last 3 months, what has been the correction that we've seen? And also, since there's a price reduction, there could be some kind of benefit. But how much of a gas you source on a spot basis?
Yeah, thank you for having me. I'll give you in actual numbers because I don't know the percentages. So
Okay.
Up to 3 months ago, the gas prices were hovering around 68 rupees a standard cubic meter. And then it went down to about 65 rupees a standard cubic meter, I think somewhere in November and December. And currently the prices have gone down further to approximately 48, 49 rupees a standard cubic meter. So that's been the reduction from 68 to 48, 49 in the last 3 months. However, in the last 3 months, a lot of the manufacturers had moved to propane and LPG, which were anyway at about 50 rupees a standard cubic meter. So the gas prices have now more or less equated with the propane and LPG pricing. So in terms of passing on the benefit, which is what your second question was, I think some adjustment will happen, but like some people want on LPG and propane. But I think a lot of it is factored in. But yes, there will be some small price corrections going forward.
Okay, Abhishek, if you could give us a couple of numbers, then what is your mix currently between propane as well as gas, if you could tell us that. And from your gas portion, how much of it is on spot?
Right. We have 3 kinds of gas. We have one northern plant, which is on an average Brent, a 3-month moving average of the Brent. There, this gas price increase or decrease doesn't matter because that follows the 3-month Brent average. We are seeing the Brent go up in the last 1 year, and now in the last quarter, it has started coming down. It's hovering around $85 to $90 per barrel. So therefore, our gas prices currently are about 55, 56 rupees a standard cubic meter in our north plant. That will further go down as the Brent keeps coming down or go up as the Brent keeps coming up. So that's the northern plant. As far as the western plant, which is our plants in Ahmedabad city, also in Morbi, there we are getting supplies from GSPCL and Sabarmati gas. That's the one which has gone down from 68 to 49. That's the western plant. And the southern plant, there we are 100% exposed to spot. But we had moved from buying spot to convert the entire plant to LPG. So, of course, in the south, the LPG and propane prices are different. There, our spot prices, I don't even know what they are. But the last I saw a couple of months ago, this was like 95 rupees or 100 rupees a standard cubic meter. But we had moved to an LPG situation there for the entire plant. So today the LPG is costing us about 64 or 65 rupees a standard cubic meter.
Abhishek, hi, morning. So just let's come down to margins then, right? I think dropped to about 7% last quarter. The quarter before that was about 8. The year before that was about 12. What will margins look like in the third quarter, if you can give us some indication? And I mean, actually, the second half with what's happening on the gas front.
So look, 30% of the tiles cost is natural gas. Therefore, we got hit very badly with margins coming into this year. And the third quarter, in fact, has been the same gas pricing as what it was in the second quarter. So I don't see any difference, but I can't give you any forward-looking statements. But margins will and are under pressure because of extremely high gas prices. It's only now that the gas prices have come off and the LPG propane also are hovering in that region. Because when we moved to LPG propane, the LPG propane was at 60, 62 rupees a standard cubic meter. So it's very recently, which is this month, where it's gone down. So again, the third quarter, we've been in a period of extremely high gas pricing.
I think it's reflecting in the stock as well, right? I mean, the stock has halved in the last 12 months. So clearly the street is concerned about the margin pressures. At any point, do you think you would get back to that 8 to 9% margin mark? I'm not talking about double digits. I know that's a far way off because of the challenges. But 8%, 9%, a gradual improvement there this year?
Yeah, so volumes, again, are muted in quarter 3, but quarter 4 onwards, we see volumes also coming back because, energy prices and various other input prices have also started numbing. because most of the products we buy are again exposed to natural gas in some way or the other. So, so from that point of view, yes, volumes would come back. We're looking at a good.
No, Abhishek, my question was on margins. Will your margins come back to that 8 to 9% mark?
It's all related to
Sure.
volume at the end of the day, and the margins in the ceramic tile industry is all very much linked to the capacity utilization. So capacity utilization has not been at 100% in Q3. Q4 onwards, we see that happening. And your question exactly as to how the margins would come up, if this gas prices had to remain, obviously we would start inching up in margins in the next year, and it should be decent increases in margins.
So at current reckoning, we're not asking you for a number on Q3, but from Q4 onwards, there will be an improvement in margins, right? That's the takeaway at current reckoning.
Yes. So there are three levers to that. One is capacity utilization. Number two is lower gas prices and no major pass through of the gas price advantage. And the third thing is what obviously is better on volumes.
Okay. All right. What about volumes? Since you're talking about that, what should you end this year with in terms of volume growth? And if you have some sense of FY24, and I think exports is very small for you, 3-4% approximately. But have you seen some bit of slowdown over there?
No, exports is going up. In fact, for us, for all branded players, exports is slightly smaller. But Morbi, which is 75-80% of the revenue comes from, volume comes from Morbi. They're seeing a huge uptake in export again due to the European gas pressure, which is one lever. The second one is the freight costs have gone down, and the third one is that there are more buyers coming back to India to buy products. So exports really picked up for the Indian ink tiling. And as far as we're concerned, we should see margins going up as volumes keep going up. So volumes in Q4 generally are better than any other quarter.
And this weakness of volumes in third quarter, it's seasonal. Happens every quarter, or this is something you saw this time, Abhishek?
Not really. Third quarter is generally better than or slightly better than Q2. This time we've seen October, which went very bad. Now, a lot of people are saying that all the festive, things were in October, from Puja to Diwali, etc., etc. But October was the poor month. November was better, and December is slightly better. So October really was the spoil spot in this quarter.
All right. Just one final question. What's the outlook for revenues on the allied products front in terms of bathware, faucet? Your faucet capacity has gone up as well. What's the outlook there?
Yeah, so that's doing well. Obviously, we had envisaged a very, very large percentage growth in this year. That may not happen because the markets generally have been muted, but that's doing well. And again, next year should be a very handsome double-digit growth going forward.
All right, we will leave it at that. Thanks a lot for joining in. Have a great 2023. That's Somany Ceramics. We'll slip into a quick break. When we come back, more on the markets, which, by the way, is sinking further, down 117 points now on the Nifty. Stay tuned. We'll get you some trades up ahead.